Coming to balance sheet. What is a balance sheet? Now students, balance sheet is a statement which is prepared for showing the financial position of a business, summarizing its assets and liabilities as on a given date. Now it makes it very clear that balance sheet is not an account, it is a statement, and this statement shows the financial position of a business by depicting the true and fair values of its assets and liabilities as on a given date. Remember, it is not for the year. Balance sheet is always prepared as on a particular date. So the format of the balance sheet appears like this. Balance sheet of, here the name of the businessman or the business is written, as on, that is the date on which it is prepared. The right hand side shows the assets and the left hand side shows the liabilities. Now students, all the accounts with debit balances are shown in the asset side and the credit balances are shown on the liability side. So just to illustrate, assets can include cash, investments, debtors, building, machinery, stock, and so on. The liabilities will be capital, that is insider liabilities. Out of capital, drawings would be deducted. Net profit would be added. And in case it is net loss, then loss would be deducted. Then it can include creditors, loans, and other outstanding amounts. And at the end, the total of the balance sheet will tally out. Now students, let us come to various items that appear in the balance sheet. Now, various items or various groups of assets and liabilities that appear in the balance sheet are, like first of them is current assets. What are current assets? They are assets which are in the form of cash or they can be converted into cash within 1 year. That is cash or convertible into cash within 1 year. They are the assets which are used in the day-to-day activities of the business. Then we have fixed assets. Assets which have a working life of more than 1 year. They are the assets which contribute to the operating capacity of the business. Then investments. Investments refer to amounts invested outside the business. Then students, we have current liabilities. That is amounts payable within 1 year. Since they are liabilities, so any liability payable within 1 year would be categorized as a current liability. Then long-term loan or long-term liabilities. We should write it as long-term liabilities. That is liabilities which are payable after 1 year. That is more than 1 year. Then students, besides current assets, fixed assets, investments, current liabilities, long-term liabilities, we can have items like capital and drawings also. So then we can have capital. that is money invested by owner. Then we can have drawings. It is money withdrawn by owner. For personal use. Remember, this amount so withdrawn by the owner for personal use is shown as a deduction. Shown as a deduction out of capital. Then there are intangible assets. Intangible assets are those assets which do not have physical existence but they work for the business. They are a part of business. So, assets which do not have physical existence, they are, for example, goodwill, patents, copyrights. So such assets are included on the asset side of the balance sheet. Similarly, we can have various other kinds of groups which will appear on the asset and the liability side of the balance sheet.